Let me start off today by giving you some absolute facts, some certainties, some things that I know are true. And I think you're going to agree with me, but let me know in the comments below if you don't agree with me. And by the way, hitting the like button now is a really good idea. Anyway, no, here's some things we know for sure. We don't know anything for sure. And in fact, I think that's what's happening with the market right now. We're sitting here at all-time highs. We've been at all-time highs for years now. I mean, years. We're sitting under a president who is consequential. I mean, significantly consequential, maybe the most consequential president in decades. And it doesn't matter whether you like him or hate him. It's just true that he's changing a lot of stuff. And we don't know how all those changes are going to come down. I mean, we're beginning to see a little bit of evidence that the tariffs are generating lots of revenue. We're seeing a little bit of evidence, or a lot of evidence, I guess, that they're not really flowing through into the CPI or the PPI, et cetera. I mean, seeming even Powell seems to be saying now, no, looks like it's transitory. It looks like it's not going to be significant. But we've got other things going on too in terms of this international trade thing is it's unknown. We don't know all the details of how it's going to play out. We're also on the verge of this AI thing. We'll talk about that a little bit more down below, but we don't know how it's going to play out. We're going into space. I'm going to be talking about that a little bit. This is significant what happened with regard to that Starship 10 finally, having a perfect flight. This is a big, big deal. Nobody's talking about the reasons why it's a big deal, but I will be. Okay, so I mean, and I could go on and on. We have a lot of stuff right now. There's a lot of moving pieces. And I think the stock market's sitting here at all-time highs. You got Tom Lee, who has maybe the most respect of any analyst right now, saying we're at the bottom of a bull market. We're just beginning a bull market. But how crazy is that? That we're at the beginning of a bull market when we're already at all-time highs year after year. So, yeah, I think we're in unknown territory. And I think right now the market is taking a pause to think about that in as it has the PCE coming out tomorrow, as we have the Fed just a couple of weeks away from making their decision. I think it's taking a pause. I think it can't really decide what to do. And then, we'll see. I mean, I think it's going up from here. That's what I believe. I think the market's going. I think the economy is going up from here. I think the market is going up from here, and I think Tesla's going up from here better than either of those other two things. But call me crazy. Anything could happen. All right. So what are we having this morning? Well, we're starting off with a flat market. That's kind of what I'm trying to say here. Is the market is flat? Tesla is not a tad, but not really significant. And the market is flat, just like it has been all week long, even now after the NVIDIA earnings. All right, let's get into the news. There's a lot of really, really cool stuff here. So hang in with me. Here we go. Tesla FSD is now available for sale in Australia. Oh, yes. We now have a second continent as well as a second country. I guess maybe I know it sounds how in I guess Canada and Mexico. So this is a second continent, but it is a milestone. It's one more added country that is doing FSD. This is good news. 24/7 Wall Street's year-end price target for Tesla is now 351.73. It's pretty much what it is this morning. I think we're 347 and change, which represents a fractional upside potential. Our forecast through the end of the decade is based on the company seeing projected revenue growth climb from 112 billion to 297 billion by 2030. So 112 to 297 billion. So if revenues go to 297 billion, it would put Tesla up in the top two or three companies in the world in terms of revenues. Now, of course, other people are going to grow in that time as well. So then, and then normalized EPS growth of 1.91 in $1.91 in 2025 to 11.24 in 2030. So about a six times increase in earnings between now and then. Sawyer Merritt has this morning. Waymo now says it has 800 vehicles in commercial operation in the Bay Area, up from 600 in May. And across the United States, Waymo has deployed more than 2,000 vehicles, up from 1,500 that they reported in May. They have 400 in Phoenix and 500 in LA. Reuters has this morning. Once we can make it basically work in a few cities in America, we can make it work anywhere in America, Musk said. He told analysts that at a conference call in April. He has called Waymo's approach fragile, saying its ability to expand is limited. Many investors, of course, are buying into Musk's vision. That's why the stock is where it is. Some analysts attribute the vast majority of Tesla's stock market value to autonomous driving capabilities that investors are betting can reach scale much faster than Waymo's efforts. If successful, its rapid commercial expansion, the Robotaxi business could solidify a new growth engine for Tesla, you think. Reuters interviewed a dozen current and former industry executive regulators, law enforcement officials, and city planners to contrast Tesla's early expansion efforts with those of Waymo. These are very interesting results, actually. Got to give Reuters a little bit of a hand. Current and former Waymo executives said their market-by-market approach of mapping and testing before expansion is essential to ensure safety, helping factor in the peculiarities of each city's roads. For example, steep inclines in San Francisco, and make it difficult to see what's ahead. Yeah, you've been driving around San Francisco. Sometimes you go over the top of a hill and you have no idea. You're like, "Aye." Anyway, we really need to understand the core ingredients of each of these cities, said Waymo product manager. There's a lot of risk in doing this incorrectly. Musk has also talked about the importance of safety. We don't want to take any chances, and so we're going to go forward cautiously, he said last month. And that's what he said. He said the toe, and then the foot, and then the ankle, and then the knee. I don't know. That's not what he said, but basically he said, we're going to go really, really slow. And so far, that's what's happening. Tesla and Waymo both use AI in autonomous driving, but Waymo's technology involves more of a step-by-step process. And it takes data from high-definition maps, advanced sensors, et cetera, et cetera. Tesla, in contrast, says its system makes driving decisions more like a human. The company said it uses an AI method where the videos captured by the vehicle's cameras are interpreted by software, which instantly translates into driving decisions without any intermediate steps used by Waymo. So yeah, this is a huge, massive difference. And of course, those of you who have FSD and who are using it know it's pretty close to flawless now. I mean, it's just absolutely incredible. Somebody said this morning that one of the things is it's polite. I mean, it really, really pays attention, lets people in. Sometimes it's a little aggressive in lane changing into tight situations, but that's the only way you're going to get over. And when you're autonomous, there's no head. You're not seeing the guy ahead going, hey, I got to get in here. So Tesla is pretty aggressive on some of those lane changes. Waymo has experimented with aspects of Tesla's approach, but said in a research paper last year that there are challenges and limitations with the performance, but they don't have 6 million cars out there getting data. Musk has set an ambitious timeline of having millions of Teslas operating autonomously by the second half of next year. I think he said like up to or around a million or a million plus. I don't think he said millions. With companies which compares with Waymo's roughly 2,000 vehicles currently. After launching the program in Texas in June, Tesla is awaiting approval for Arizona, looking forward to expanding its states like Nevada and Florida and California. How do they miss California? The pressure is on for Tesla to deliver on these promises because its core electric vehicle business faces headwinds. Its vehicle sales have declined globally, including a sharp drop in Europe. We'll talk about that in a second. Falling behind Musk's Robotaxi timeline would delay a key new revenue stream. Well, I'm now predicting that Tesla will have record sales in third quarter and potentially even record sales in the fourth quarter of vehicles. And then when you add in energy and other things, record overall sales. Waymo is the only company in the United States offering a paid, fully autonomous ride-hailing service open to anyone. That's true. Before expanding into a new market, Waymo fine-tunes its technology through testing in virtual simulators. We already know that. In Phoenix, it started offering test rides with a driver in the front seat more than 3 years before it opened paid driverless ride hailing to the general public. It took nearly 4 years until Waymo opened up autonomous service in the Phoenix airport terminals in August of 2024. So the fact that it's taken Tesla 2 months, not really a very big deal. Waymo says it's reducing the testing time in new cities as its autonomous technology gains more experience. Paul Miller, an analyst at market research firm Forrester, said Waymo's approach is safer and more realistic in the short term, while Tesla's approach is a riskier bet, but a far, far cheaper approach to scale globally. Bank of America analysts estimate Waymo lost between 1.2 and 1.5 billion last year. But analysts expect that Waymo's model will eventually be profitable as vehicle costs come down and ridership grows. 1.2 to 1.5 billion loss. I don't think Tesla's having those kind of losses. Morningstar analysts projected in a March report that Waymo would have a rapid ramp-up period over the next few years, while Tesla will have a slower initial Robotaxi rollout because its software will not be ready. Morningstar's analyst is just completely flat wrong. Morningstar expects Tesla to launch fully autonomous Robotaxis by 2028 and surpass Waymo's ride-hailing market share by the end of the decade. A huge concern, even with Waymo's meticulous approach to studying new markets, it has encountered problems that has rankled city officials. Now, this is new reporting. In Austin, where it started offering autonomous rides through the Uber app in March, authorities have often seen Waymo vehicles ignore officers' hand signals, drive into dangerous situations, says Austin Police Lieutenant William White. In May, a Waymo vehicle drove into a floodwaters, and the passenger had to find a way out. Obviously, that's a huge concern, said White. If that person had died, we could be looking at a serious criminal incident. Last year, during a charity walk near downtown Austin, a Waymo vehicle tried repeatedly to go around an officer who was clearly blocking a roadway. Police eventually disabled the vehicle by wrapping tape around one of its sensors, White said. That's interesting. Austin police have had to create a new system of traffic citations to handle repeated incidents where Waymo vehicles froze and blocked traffic. White said police have issued 3 citations to Waymo since March. Officers have said the process for citing a driverless vehicle is so time-consuming that they often avoid it. If they decide to pursue it every time, we'd be talking about hundreds of citations by now, White said. The department has had limited interactions with Tesla Robotaxi so far because it's just getting started. Well, they have a lot more vehicles, that's true. Waymo spokesman Chris Benelli said that the company has had robust engagement with Austin police and the officials for Waymo. Waymo does this thing, where they really go out and they get more involved with the city. Waymo takes all observations and concerns seriously and uses the feedback to improve their system. Beyond technical challenges, autonomous vehicles firms must navigate a patchwork of regulations. We know that. So Waymo has started meeting with local officials more than a year before its March launch. I think Tesla was talking to those officials a few months before. Okay, the DC City Council, it says, has been waiting years for a report from the city's transportation department on recommendations for commercial driverless vehicle rules before moving ahead. While the regulations may be ready by the end of 2026, there's no timeline for passage. Waymo has hired 3 outside lobbying firms, and it's circulating online petitions using residents to help bring Waymo to DC. DC's Department of Transportation said Tesla has not reached out at all. Guess they're not that interested in getting the DC business. I don't know. It's again, this is typical of Tesla. I don't think they pay nearly as much for these kinds of things, like for a bunch of lobbying groups. I think they want their stats to say it all, and that's what I'm expecting to happen next. CNBC says that sales of Tesla cars in Europe plunged in July, in the company's seventh consecutive month of declines, while Chinese rival BYD saw a monthly surge. New car registrations of Tesla vehicles totaled only 8,837 in July, which was down 40%. And BYD, meanwhile, recorded 13,503 new registrations, up 225% compared to last year. Tesla's declines took place even as overall sales of BEV cars rose in Europe. Elon Musk's automaker faces a number of challenges in Europe, including intense ongoing competition and reputational damage, as we know. Tesla has struggled globally in recent times. The company's auto sales revenue fell in the second quarter. It could have a few rough quarters ahead, Elon Musk, of course, told us. But I think that's all been resolved. I've talked about it for 2 days. I'm not going to repeat it now. If you want to see what I've said about that, look back at yesterday morning or on Monday morning. One of Tesla's issues is that it's not had a major refresh of its car lineup. That's not the problem. Chinese brands commanded a record market share rate of more than 5% in the first half of the year, which is a record high. It's not only Tesla feeling the heat from Chinese competitors. Jeep owners Stellantis, South Korea's Hyundai, and Japan's Toyota and Suzuki all posted year-over-year declines. Volkswagen, BMW, and Renault all had increases. Now, here's from the Telegraph. The Telegraph is really, really nervous. Autos account for 6% of German GDP and estimated to account for 7% of the EU's entire GDP itself, with 13.8 million jobs dependent on the sector. Said that if the companies can't compete with EVs and petrol cars are banned, they're simply going to disappear. It will be a fatal blow to the European economy and one that may well plunge it into a full-scale recession. Of course, there's nothing wrong with EVs themselves. Many of them, and especially Teslas, and many of the new Chinese brands are stylish cars that are very practical to drive. They are often better for the environment, even when the metals going into them are taken into account. If people want to buy them, that's fine, according to Telegraph. The problem is that the market has been twisted top down by quotas and targets imposed by bureaucrats and virtual signaling politicians who don't have a clue what they're doing. One by one, the dominoes are now collapsing. In reality, it won't be long before the whole insane scheme will have to be scrapped. It's just a shame that one of Europe's largest and most important industries might be destroyed in the process. And it was going to be destroyed anyway, even without the bureaucrats and the virtue signalers. In fact, if anything, EVs might have done better not to have those people creating all this nonsense that has caused lots and lots of people, especially in the United States, to steer clear of EVs when they might have gone to them if it has just been a competitive situation instead of the government telling us what to do. Brian Wong hinted at this last night. But other than Brian, almost nobody gets it. The Starship 10 launch and completion of their journey perfectly yesterday is massive. It's massive for space and for fun, and it's interesting and exciting for science, and that's where all the concentration is right now. That's what people are paying attention to. What Brian was pointing out is this is going to eventually, probably by the end of this year, mean that putting anything into space is going to be cheaper than sending it to New York City from Los Angeles by UPS ground. It's going to be so inexpensive to put stuff into space. And this is going to change the economy. It's already changing the economy. It's going to change the economy in so many ways. And I'm going to put together an entire report on this for the weekend. Maybe I'll see if I can get somebody to come. Maybe Brian will have this discussion with me. But I'll talk about all the things that are going to be impacted. It's going to be crazy what's going to happen with Starship. This is not going to be, like one ship, going up or 5 ships going to Mars. No. It's way bigger than that. They are setting up a factory to make starships like, on an assembly line. I'm teasing the weekend, but you'll want to watch that report. This is Randy Kirk, by the way. And yeah, please hit like and subscribe and notify, and please join Patreon and show up later today when we will have all kinds of financial analysts talking to you. We'll have Bradford Ferguson first and then Cern Basher. And if you need somebody to help you with your financial analysis of your or manage your portfolio, either one of those guys would be shockingly amazing to help you. And I don't get paid to say that, by the way. I get nothing, not a dime, believe me. So please understand that's just because I like them and I think they're both smart guys. In the week ending August 23rd, the advanced figure for seasonally adjusted initial claims was only 229,000, which was a decrease of 5,000 from the previous week revised level, which was revised down by 1,000. The 4-week moving average was 228,000, an increase of 2,500 from the previous week's revised average. And that was revised down by 250. The advanced seasonally adjusted insured unemployment rate was 1.3%, which it has been almost every week since I can remember, and unchanged. It says unchanged here, which we know. Then the total number of continued weeks claimed for benefits on all programs ending August 9th was 1,987,000, a decrease of 18,000 from the previous week. 2 weeks in a row now we've had big decreases in the continued weeks claims, which means that people are finding jobs. So this is an extremely good jobs number, and bodes well for next Friday's jobs number, because there's just not a lot of people losing their jobs. There's not a lot of people applying for unemployment insurance, and there's a lot of people finding jobs at a better rate than has been true over the last few months. Real gross domestic product GDP increased at a rate of 3.3% in the second quarter. That is the second reading, and that is up from what was initially 3%, according to the second estimate released by the U.S. Bureau of Economic Analysis. So we've got an excellent jobs report. We have an excellent GDP report, increasing the estimate by 10% compared to the first estimate. The San Francisco Chronicle says this morning, a new first-of-its-kind Stanford University study offers some of the strongest evidence yet that the artificial intelligence jobs problem is only hitting the Gen Z. The report, Canaries in the Coal Mine, 6 Facts About the Recent Employment Effects of Artificial Intelligence, published Tuesday, draws on millions of anonymized payroll records from ADP, the nation's largest payroll processor. It found that employment for workers aged 22 to 25 is the most AI-exposed jobs, including software development and customer service. They've dropped by 13% relative to less exposed roles. By contrast, older employees in those same occupations have seen employment remain steady or even grow. The study highlights a clear divide. Employment has begun to decline for young workers in highly exposed occupations like coding, call centers, but older workers and workers who use AI to augment, not automate work, have seen job gains. The researchers emphasize the disruptions happening by fewer job opportunities rather than falling pay. So the job, just is kind of like what Nick Gibbs was telling us on Tuesday night, what he's hearing, what he's seeing. We're not seeing AI take a lot of jobs. What we're seeing is AI take a lot of entry-level opportunities as opposed to actually laying off people. Okay, breaking numbers here. Pending home sales decreased by 0.4% month over month, but rose by 0.7% year over year, according to the National Realtors Association. So what you got here is you got another piece of good economic news, is that we're seeing some resilience in the housing market as mortgage rates come down. And they, of course, will be coming down more this week as we're seeing finally getting the bonds under 4.25. There you go. I got it now. We'll talk about that in a minute. All right. So we've got inflation, according to Truflation this morning, 2.16 in the overnights, 1.96 year over year, and 2.31 now on the PCE comparison. I doubt if that's what PCE is going to come in tomorrow. Probably PCE is going to come in at right around 3% year over year, but we'll see. Maybe it's a beat. Maybe we'll see something fun on the PCE tomorrow. Trump comes in at 48%, so he's dropped back down. He was 47 the beginning of last week, went all the way to 50, now back to 48. It's been in that range for a long time. And the GDP number is at this is the Atlanta Fed's GDP number is now at 2.2%, and they will have a new reading tomorrow, which you probably won't hear me talking about until Saturday afternoon is probably when I'll first be able to report on that. All right, what have we got going on with the numbers? Tesla is down 1% now at 345.72. The Dow is down 0.19. NASDAQ is actually up 0.15, and the S&P is about as flat as it can be. It was 2 seconds ago, it was down 0.2. Now it's up 0.2%. Okay. So it's very, very, very flat. As I said at the beginning of the show, I think I know what's happening, but I don't know what's happening. And none of us know what's happening. But every evidence right now, you know what the biggest evidence that we might need to have a correction is that there's too many bulls. When everybody's bullish, then that's when you have to really watch out. But I don't know. It's so interesting. Tesla is now flattening at that 1% down. Yeah, hard to call. We'll look one more time before we go, if I remember. Sometimes I don't. Okay, we've got the Magnificent Seven are all mostly up. Microsoft down a little, and NVIDIA now down 1.32%. Seems like Tesla is following NVIDIA around the last day. That's kind of weird. Anyway, the VIX dropped 2.56%. It's actually been up and down like crazy this morning, but it's at 14.5. That's really low for the VIX recently. Now, remember, right after Trump was elected, I think it was down in the 11, 12 range. So we'll see if we can get back down there as the risk on gets more and more pronounced. The Cathie Woods are mostly green this morning. Mostly green. Only CRISPR and TDOC are down a little, and the rest are up. All right, let's go ahead to the bonds. We've got the bonds down 1.1%. That's nice. 4.227. That's a good number. Keep it up. Let's go 10-year. We have got oil down at 50 cents at 63.66. That's Texas Intermediate, of course. We got natural gas up 2% at $2.94. So that's getting kind of up there again. Maybe it's going to go back past 3. We'll see. We've got gold up $20. Another all-time high, 3,469. Whoa. Silver now trying to attack its all-time high, up another percent, 39.11. I think all-time highs are around 39 and maybe 39.50. So very close to the all-time high. And copper's up this morning also 0.9 at $4.46, roughly where it's been for many weeks now. The dollar is mixed. Bitcoin is up 963 to 113, still way off its high. And those are the numbers that we're seeing right now. Last night, of course it was outstanding. Everything last night was outstanding because we had, Brian Wong on out again. I'll put the card up. You just got to go back and watch it if you didn't already. So much good stuff in there about SpaceX, etc. If you didn't see it, you just missed out. And then I did an analysis last night at 7:45 last night. I did a show. Highly recommend you go back and take a look at it. It was about what I believe will be the most amazing PR stunt of all time. And Elon Musk is going to do the stunt. He's promised to do the stunt. And I think it's coming up soon, probably before the end of the year. Maybe it'll be after the beginning of the year, but it's going to be a blow-away stunt. And if you didn't see that show, I'll put that card up as well. All right. Bradford Ferguson coming up at probably 5:15. And then we'll have Cern Basher at 7:45. All right, going back and checking what Tesla's doing now. Nope, hanging out, 1.27 down now, 345. So we'll see how the rest of the day progresses. I think maybe we could get back into the green. I think it's down a little. It might be down a little bit on that European news, but I mean, that's no shock. And the rest of the news looking good to me in terms of Tesla. I think it's up and to the right. That's what I've been saying now since last Sunday. We'll see. There's going to be days though. There's going to be days when it's not. But overall, I think we're on the way in every regard, technically, foundationally, fundamentally, stock market, and the overall economy. All I don't see where the negatives are going to come from. So this has been Randy Kirk. It has been great talking to you.